Good morning again. Just call me Loke. First, thank you for giving me this opportunity to speak to you all. I want to share with you all some experiences that we have with customers in the banking industry. And first, this one, safe harbor statement. I know you can't read it, but I need to put this up. So, what I'm going to share in the next 20 minutes or so, okay? First thing is, my title of this topic is, what are banks doing with data? I'm going to share with you, first and foremost, why are they doing it? What are the benefits? I'm going to give you some examples, and then I'm going to share with you how they accomplish it, and what next. A lot of things in 20 minutes. So why? First thing, why are the banks doing it? Because of forces of change, okay? Economic factors. You take a look at, things that have been changed since the beginning of the year until now. The whole global economy is different. It affects the local banking system. It also not only affects the local banking system, it affects the global banking system where you are part of. Legislation changes. There are, every country, not just country, the global blocks and things like that, you have all different changes. Okay, a number of years ago, EU implemented MiFID. Okay, and then with that is that if you want to deal with any European entity, you need to comply with MiFID 2. Okay, so there are legislation coming up. PSP and so legislation, okay, the regulation that you gotta comply with, and that's the reason why they're doing it. Consumer expectation. You heard from Professor Malik, the sharing economy, some of the slides he has put out there. Sharing economy expectation is different. Okay? You as a consumer, you expect different things from not 10 years ago, from last year. Okay? And the thing is that the industry changes. Okay? The industry has a lot of changes. You have heard about open banking, interaction of open banking. Some of you may actually have heard of banking 4.0. Okay, wonderful words, that people are coming up with. Platformification of the banks and emergence of fintech. It's because of all these things, all these challenges, that's why banks are looking at the data and doing something with the data. In fact, open banking is all about sharing data, looking at several various technology, APIs and whatever not, okay? But the key thing is all about data. That is what open banking is all about. Then you have competition. Your competition is not, okay, the neighbors see you, okay, your friendly compatriots in the banking industry here in the Philippines. Your competitions are actually these economic factors, these external factors and things like that. That's your competition. Okay? And what banks are doing is actually trying to adjust to these dynamic changes. And banks are being forced, you are being forced, okay, to innovate. You are forced to disrupt yourself. Okay? You're forced to transform. And these are the reasons why banks are looking at data. They are doing something about the data. Okay? And sorry for blocking the things. Banks are externalizing the data, sharing the data, and monetizing the data. Because of these reasons, that is what banks are doing with data. So the thing is, when you hear of the whys, okay, I'm not going into details. Okay, some of the details actually is shared by Professor Malik. Okay, and the other speakers covering various aspects. Okay, what are the benefits? The benefits, the banks are looking at doing with data because with the data, it can create a new data ecosystem. An ecosystem, you heard of the word ecosystem this morning. Every community wants to create the ecosystem for themselves. You, the bank, can create an ecosystem, your data ecosystem for yourself, and you make yourself sticky for your ecosystem. The merchants, the merchants bank with you. Okay, and you want to provide merchant services, well, they can go somewhere else. How do you make them sticky? You create, okay, an ecosystem. That's the benefit. When they share the data, they create ecosystem that makes them sticky to you. Another reason why they're doing it, okay, the benefits is because they can create competitive advantage and comparative advantage. Okay, you can check through definition, the difference. Okay, this is the benefit that they get. They have competitive advantages against a competitor. They have comparative advantage with their competitors. Okay, we're all playing in the same phase, in the same Filipino market, but okay, one bank to another bank, we're up the same, but you can create comparative advantages. The last one over here is the third benefit they're looking at is create a new revenue stream. The revenue stream that they never had. Monetization of data. You, the bank, have a lot of data. You have captive information that your customer are not the people who bank with you, like, for me, I bank with a few banks. I bank with Standard. I bank with DBS in Singapore. I bank with a few. Okay, they are not really looking at me. Your customers will be like the merchants, the other B2B players. Okay, so they are able to create a new revenue stream. So these are typically the three benefits that they are achieving when they externalize the data. So what I'm going to share with you in the next probably 5-10 minutes, okay, are some examples, okay. Morgan Stanley. Morgan Stanley is the world's largest wealth management player. Some of you have wealth management business in your bank. Okay. So what can we learn from Morgan Stanley? Morgan Stanley has a lot of financial advisors. And when I use the word financial advisor, it's not necessarily a person. It's actually financial advisory firm. Okay. So I was just checking out the other day. Okay, in the 2021 and the 2022 as well, Barron published the list. Top 100 financial advisors on Barron's list. Okay, I think the 2022, 42 of those financial advisors are actually aligned back with Morgan Stanley. So the thing is that these are independent financial advisors. Why do they stick with Morgan Stanley? Because Morgan Stanley is providing them, access to data access. Morgan Stanley provides each of their financial advisors, advisory firms, a financial advisor portal. The portal for the financial advisors firm, to leverage on the facilities that Morgan Stanley has, sharing with them the data, so that the financial advisors, advisory firms can service their clients. And the thing is that what they did with their portal, the thing is that they share the data. They work with Tableau and says, how can you help me with a technology to help me to externalize my data? With governance, secure, and easy, can scale, externalize the data to their financial advisors. And that's exactly what Morgan Stanley did, and each of their financial advisors that work with Morgan Stanley, you have access to the portal, you have access to all those facilities, that Morgan Stanley provides to their financial advisors. You can do that, and you want to know how to do that, talk to the pillar to us, The next one I want to share with you, is, there was a little bit mention of MasterCard and Visa, and actually I'm not really trying to show you a Master, or in this case Visa. I want to share with you what is Visa doing. Visa is, a great global payment technology company, And many of you, issues cards, bank affiliated, cards. But whenever we go and shop or have a drink, have dinner, buy something, go to the gasoline station, petrol station, pump, we use a credit. Guess what? The dates, who we are transacting with, how much, all those information is captured. The thing is that you were saying, hey, that's Visa capturing it, but you are the card issuer. You are in the cycle. You are in the Visa transaction cycle. You have those data. Now the thing is that what Visa has done is that they have taken those data because this is really a gold mine. It's really a gold mine of information over there. That you can understand. They take that data, they curate it for different industry segments, different groups, different territories, countries, or whatever, and they offer this data to the clients. Who are the clients? Merchants. The merchants are interested in, hey, I like to know about, my market segment is just only the loan area. I just want to buy those data. Visa will sell you those data. So the thing is that what in highlight in red over here, what Visa is saying, more importantly, is not taking the data, which many banks, including yourself, you have always been focusing on the data for yourself. And what they are saying is that more importantly, they need to realize the value of this data, to the external parties, to the merchants, to the B2B partners. That's the value. Lloyds Bank, Lloyds Banking Group, largest in the UK. The thing is that they do a lot of different businesses. Just like many of you, many of you have probably the same kind of business profile as Lloyds, and what Lloyds have decided to do is that take a look at the title, building a data business with Tableau. What they wanted to do is, everybody talk about open banking, all these things, that's what they are doing. They want to share the data and they want to build a data business. Not to use the data internally, but to take the data and to offer up externally. So they created, one of the products they have is the Loke Peng Market Intelligence. They have taken this data. They have a lot of data because I think they process about 50% of all card transactions in the UK goes through Lloyds. So they have all this information. The corporates, the bank will have, they have those information. So they have all this information, they curate the information, and they offer this information, to the customers. And the thing is that one of the very common target audience is the retail market. Retail can be, if you subdivide retail, many sub-segments of which, they offer that, and this helps them to grow their business. This is what Lloyd is doing. Now, the thing is that I did mention earlier, and Professor Malik also alluded this, the fintech, emergence of fintech. I remember on his slide somewhere, fintech 1.0, they say, the fintech comes in, the banks will die, right? The thing is that it does not have to be that. The fintech, you can collaborate with the fintech. And in fact, banking 4.0 platformification and things like that, the bank can transform yourself to a fintech as well. So what I have here is an example of this company is a fintech, online PSD loan. I love them because the thing is that they have a tagline, online PSD loan 59 minutes. And you are in a banking space, not so easy to borrow money from you. You love to lend money to me, but the thing is that you say, hello, can you give me document A? After which you say, oh, give me document B, document C. So by the time I finish all the document, it's like, if it's good, it's 1 month. If not good, 3 months. Okay, then you tell me, look, you're not credit worthy. I cannot lend you the money. Don't use this money, right? So what PSD loan decided to do is that they tied up with what is called public sector banks in India. In fact, according to Credit Suisse, they are the largest online loan marketplace player in India. All the public sector banks owned by the government, they are tied up with, as well as some private banks. And what PSD loan is telling the bank is that, you tell me your criteria, your rules, you are willing to lend or not going to lend, you tell me your rules, I build it into my engine, I open my platform, to the M and SMB, micro and small and medium businesses across India. The thing is that you saw some stats, right? Underbank. The underbank, it's not that they don't own a bank account. The thing is that they own a bank account, they don't do anything because they find it very difficult. So when online PSD loan that did this, the banks are finding that, hey, loans are coming in, and then online PSD has actually taken the risk based on the rules you have given to them, and they tell up to you, application. This is all the application coming in, and your system will say approve, not approve. So online PSD loan, will approve and not approve a loan in 59 minutes. So as a consumer in India, a small mom and pop shop, I just want to take over the next door neighbor, I want to buy over his stuff, but I need some money, not a lot, I go to online PSD loan and making my application, because I'm telling my neighbor, afternoon I'll tell you, I can take over now, it's submitted, it shows me, by 1 hour's time, I know I would have the financial capability to buy over his shop or not. So the thing is that as a fintech, what they did is that they took Tableau, and pack it into the solution, embed it inside there, and offer this information to the banks. So the thing is that the emergence of fintech doesn't have to be a competitor to you. Leverage on fintech. So, I know I've just about a minute or so. So how did they do this? How did all these 4 examples I shared with you, how did they do this? Not actually very complicated, because number one, you have all your data, Tableau, whatever it is, you put all those things, you create your, things that you want to share, the dashboard or whatever things like that, you create it, you put it on the server, and the server, and if you're concerned about data sovereignty, we have an on-prem server. If you say, I embrace the cloud, we have the top offering. You put it there, everything, everything will be safe, secure, well governed. So you actually publish it to the portal where your clients, financial advisors, people borrowing money or whatever, your merchants. So what next? You want to improve your journey in externalization and monetization of data? Very simple, contact us. The third pillar folks are all here. I'm here. My colleague DJ is outside. So I'll be here and outside. Just pop over, and if you want a deeper conversation, the third pillar myself, we can get into deeper conversation and talk with you how you can externalize and monetize your data in this journey of open banking, open finance, banking 4.0, whatever you call it. Okay, thank you very much.